everybody. This is Fernando Labastida. I'm here with Alexander Parra. He is the founder and CEO of Lakeside Consulting Group. And today is our debut webinar for the Continuous Brokerage series. And this particular one is how insurance brokerages are using AI-ready data infrastructure to win in 2026. Welcome, Alex.
Thank you,
So
Fernando.
glad you could host this first webinar. Yeah. And so, yeah, perfect. So why don't we just get right into it, unless you had something that you wanted to say before we kick off with the questions.
No, I thank everybody for joining, and this is the first of what we hope to be many webinars around this subject, AI, data, and the property and casualty brokerage space, as well as some segue into healthcare. So we look forward to starting off here and getting everyone educated on what you kind of need to do in order to operate a successful, scalable brokerage in the new AI era.
Yeah, so talking to that, I think you kind of knew that this was coming a little bit, a little bit ago, like as far back as like 5, 6 years ago. So walk me back to the beginning. When did you first see this industry had a data problem that nobody was solving?
Sure. This goes farther back from, working at a couple firms doing risk management and finance, especially around workers' comp claims, your various other property casualty claims, as well as some other pieces. You started noticing that there was questionnaires, holes in the coverage, and where were those holes getting filled? Especially on the brokerage side, coming from a family of brokers. My father has this very successful life and health brokerage here in California, but he was very old school. It was, get me a Rolodex, a phone, and worked on paper, so everything was up in his head. And I sat there and going, well, what happens if something happens to you? Where does this all fall? He goes, you see those 3-ton filing cabinets behind you? It's going to be somebody else's problem. And I said, well, that's great, but what's that for the future? He goes, a lot of brokers don't think about that. They don't think about a legacy, or they think very close to, this is my book. It's what I want to make of it. And what I'll, if I lose a client, I'll find one to replace that loss in uh, commission and just move on. So it was definitely something that's been in the back of my head for decades. But really within the last 5 years, the gap in data was like, this is something that if you're a property casualty broker trying to get, 12%, 15% year over year in growth, it's like you're going to be hard pressed to have this happen. And that's kind of where I came up with the idea, kind of the renewal trap. Um, you know, Property casualty brokers are split into three common groups. You have your producers, your managers, and your account managers. So, for what we kind of want to coin them as, there are hunters or farmers and our servicers. So going from that, scenarios, you've got your hunters, right? They're your producers. They're only going to show up if there's a sale, there's something guaranteed, they've got a warm lead. They really are just there to for the next commission. Your farmers, your are your senior account managers. They're mostly in supervisory positions. They handle only about, I would say, 50 to 80 accounts at the most, because they're there to teach the next generation, or supervise that third group, which is their service account managers. Now that group is even bigger. They're more entry level. They have 200 plus accounts or more, depending on how big your brokerage is and what's the size of your consolidation. And they're really only there to keep the account serviced. They can't do anything more than just handle the renewals. They're drinking from the fire hose every day. And that's something where I saw, if you're a firm just trying to to grow, it's hard to grow when you're treading water, just
Yeah.
maintaining. There's no way. I mean, and when you start getting some market conditions like we had out here in California with fire season, especially in certain lines like personal lines, you just get heavily impacted to the point where you can barely even function the renewals. Um, it's really fun when multiple carriers pull out of business overnight and refuse to write new policies or renew the old ones. Now you're scrambling to replace coverage in a market where the replacement one, especially if you're dealing with high net worth individuals, it's hard to replace coverage for a $10 million house when Fair Plan caps you at 2 to 3 million. Let's not even talk about the liability coverages that are missing as well, because Fair Plan will only cover fire. So let's talk about, somebody you have, let's say you have construction, you see somebody gets hurt on your site. Well, there's liability on an umbrella policy that you have to go find now. There's a multitude of coverages that you have to replace a homeowner's policy with that really, again, you're just treading water. So if your people are just treading water, now this is getting impacted, you're losing proposition as well. And I challenge any brokerage, show me organic growth that's not in your book now, that's not based upon increase in premium. That was a lot of cases with a lot of brokerages. Oh, we're growing, we're growing. You're growing because your premium's increasing. That's not you growing. That's just inflation.
Yeah.
There's a saying, a rising tide lifts all ships. Your ship has holes. Most of these brokers have holes in their bilge that are just, yeah, you're able right now, you're getting away with pumping out more than you're taking on, but there's going to be a limit to that eventually. And you're starting to see it. You're starting to see it in California. You're starting to see it in a lot of places nationally. This is not a problem that is unique to just a region or a state. It's a national problem. You've got a workforce that's aging out. Most of your account managers are in their 50s to early 40, I would say between 45 and 65. Um, and it's when you're facing massive consolidation like the market has been in the last, 3 to 5 years here, taking on new books and not taking on those existing workers, again, you're just having more and more compaction. And again, the renewal trap just keeps showing up and being present.
Exactly. So, I just, was showing a slide here that kind of talked to that point about the account managers aging out. And then, but so you to in your methodology and what you advise companies to do is to really focus on the data. And at one point, you even mentioned to me in a conversation that to treat the data person like a Savile Row Tailor. Tell us a
Yeah,
little bit about why would you want to treat them like that? What's the importance of data for, growth for an insurance brokerage, and getting
sure.
getting to the point where they can even possibly find an exit.
Yeah, I mean, in a lot of insurance brokerages, your data is actually more important than the policies that you sell. And the reason why is it's the underwriting models. When your account managers keep it all up in their head and not into the system, it's hard to, again, renew policies when they leave. It's going to be very hard to understand the macroeconomic environment for your individual clients if they leave. Having up-to-date data in a way that can be pushed out to carriers and competitive rating models to handle renewals is tantamount to your success and your scalability and your growth. They, let's see. I mean, perfect examples are, you have umbrella policies that have vehicles underneath them. Well, if you don't keep those vehicle rosters up to date, your client's either getting a premium increase that is unwarranted because, oh yeah, I sold 5 of those cars or I've unloaded 5 of those out of my fleet. And or they're under you're being underserved, which again, that's another problem with renewals or if there's claims history. Oh, you didn't put this vehicle. Yeah, well, this vehicle's not on your coverage. I'm not gonna honor that policy. Um, it's the same across, perfect other examples are coverage limits. Um, you can be in an area, you can own a body shop, right? And there's areas in this country where there's, great examples here in old where I am in the Bay Area, in old South San Francisco. When I grew up there, there was about, and there still is, there's about a dozen to 2 dozen body shops. Well, you can own one of those body shops, have $3 million in policy coverage, but if everybody else around you has five because construction costs went up, well, if your building burns down, it's going to be hard pressed to rebuild that building at the older level. And that's, again, account managers don't really have the time to go sit there and look at what's new in the market if the market conditions have changed outside of renewal. And again, if you're handling between 200, 300 accounts as a service level account manager, you're just passing along what the information you have on the book, not really looking to update it as much. You may, unless the carriers give you an underwriting question there. So this is again where if you have your information up to date, if you get a hold of those questionnaires and you send those out to your clients on a timely basis and get it back into a system, that makes that keeps your process moving quick and efficient. And again, shows other opportunities down the road for improved coverage and happier clients at the end of the day because they know if something happens, they're going to be cut, they'll have full faith and credit of the institution. Now, going back to another part of your question was around, I mean, just to rephrase it, it was around, Fernando, what was it around again?
Around treating the data guy as a
My data
Savile Row
guys.
Tailor.
Yeah. So going back to, a lot of these systems and legacy systems that are in today's date are, they're in very dated software. Um, Even most current up-to-date systems are, they're based upon accounting systems from the 80s and 90s. There are NoSQL relationship databases where um, there's no primary or foreign keys. They're just objects sitting around that you have to custom flat file build to get any information out of. So again, it turns into the person doing that customization all of a sudden is a tailor. They're bespoke Savile Row Tailor, as I pointed out. Um, and when you have somebody like that, not only do you have to pay him a king's ransom, you have to pay him a premium to hide him from everybody else because you're not the only one using that software. If he decides if you get him angry and they get a burr in their saddle, they will be snatched up by the marketplace be unemployed for 5 minutes. They will always have a job because they know how the system works backwards and forwards. Again, that's a problem nationally. I mean, it's not industry epidemic too. I've seen those examples in finance, in retail, in insurance. There's a one in every shop. There's somebody who just they have been there for so long, they know everything backwards and forwards, and they're there just doing the work. They don't complain a whole lot, but when you do, you got to listen and you got to keep them happy. And that again,
Yeah.
if you're sitting there as a risk manager or chief risk officer, that person's that person's highlighted on my list for key person risk day one. What happens if he doesn't, what happens if he
Mhm.
wins the lotto? What happens if he decides I just don't want to work anymore this day? You're in trouble.
Yeah.
And so again, getting your data up to date in a system that everyone can understand or knows, or at least has capability to push out without that key person, faster and better off you're going to be.
Yeah. Well, yeah, thanks for answering that question. I wanted to skip to a question that I think is sort of very timely in the brokerage industry right now? You're seeing consolidation everywhere, right? People
Yeah.
getting out, closing up, cashing out. What are you watching happen? And how does an insurance brokerage owner, CEO, et cetera, come out of this ahead of everybody?
Sure. So, well, again, to your point, we're seeing massive consolidation in our system, in our environment. It's twofold. Some of it is just you have a generation just getting ready for retirement, and you have another set that they may still want to work. The problem is they look around and everybody else is not too far behind them in age. Well, how do I go and replace these people? Well, I can't, so I have to sell. Our options give you the ability not to have to make that choice to force a sale. What we can do, again, plugging these, letting AI, letting data consolidation take its and curation take its course, you can now start scaling to whatever way you want. If you want to scale down with less people or just as people want to retire, you can just replace them. That's totally possible. Um, if you want to, or if you want to turn this over to your next generation, you now can build a platform which allows them to grow and scale to their needs and their wants and desires. It's basically replacing the bodies with the intelligence. Um, it's the same output, no new headcount. And and if you finally do decide to cash out, now anyone who's in the market, you now have a full audit trail to show them, yeah, this is totally capable of being grown, or this is totally capable of delivering exactly what you want as part of my sale. And that drives your valuation up as well.
Yeah, perfect. Perfect. Thanks. Okay, so tell me a little bit about, so I think it's really important to get your your how you developed your thinking about the way brokerages should go with data and with AI, and kind of go back to you worked for an insurance brokerage, an insurance brokerage, a fairly large one.
Yep.
What did you find out when you got there?
You know, here's what I found right away. Again, this was a brokerage that had grown organically, but they had been in a merger and acquisition tear for the prior 3 to 5 years. So they were buying books left and right and just folding them into their ecosphere or folding them into a branch office. The problem with the branch offices are, especially in a culture that's very used to being old school, the account manager's role is not, and this was something you see in a culture clash. The account manager was really, again, they're hard pressed to just keep the business in the door, keep it constantly churning. Their answer was, well, am I data entry clerk or am I an account manager? My job and my performance are rated on keeping the business in the door, not making sure the information in the system is 100% to your satisfaction, which was okay. That's fine. And that was the case with every one of these branch locations that I saw. Data was pell-mell scattered about based upon where the account manager knew in their head where it needed to be. But if you're trying to generate reports on a corporate level to track growth and performance, it was the mapping solutions were just astronomical. You're mapping commission from 5 different points, none of which really truly overlap. You're mapping policy information from multiple data points as well. So it's like, well, and then when you present that to management, the manager to review, go, well, how could this be so wrong with my people telling me? It's like, well, here's your gaps in coverage. Where do you want to start filling them in from? And that's again where AI can take over and we can do that curation. So that data consolidation, goes into what we like to call now data lakes, um, and lake houses, and data warehouses. There's 3 or 4 terms, depending on who vendor you buy from. But again, now you can pull all your information in and basically start doing some of that. Well, if A's not there, go to B. If B's not there, go to C. And finally, if you've exhausted your structure, call somebody and get that information in the system. And that again, it builds towards future growth because now if you have XYZ business that needs to do a renewal and carrier, it's their normal carrier will has a questionnaire. Well, now that questionnaire most likely can be answered by the system versus having to go reach out for the client, delay progress, delay a renewal, and delay the account manager because now they have to stop what they're doing, wait for an answer, keep moving, and then move when an answer is responded to. Again, now what you're doing is you're taking a lot of that out of the account manager's hands and having them giving them time and hours of their day back to start dealing with the more crazier cases or projects that the broker needs help on because hey, I've got this really big client now coming on board. We need to give them a real presentation, not just what the carrier is going to promise them.
Yeah. Yeah, yeah, absolutely, absolutely. So, and I know you touched on this earlier, but I want to kind of delve into this a little bit deeper. You have, and you mentioned this as well. You have a lot of account managers, the ones who handle 200 clients, the one who handle 80 clients, at all points in between. They're reaching their 50s and their 60s. They're mostly women. They're ready to move on. They want to travel now. They want to kind of live their life. What happens to the knowledge that they carried, especially with the brokers who are kind of have, who are kind of have a more legacy way of operating? And what is the solution? Like what are you seeing replacing that? Could you explain that situation?
Yeah, I mean, your workforce again, we're in this weird era in America where we're just having a transition workforce. We're going from the baby boom generation and the immediate group right behind it, Gen X, reaching, starting to reach that age of late 40s, early 50s, which was a smaller generation to begin with. Um, that workforce is just ever so shrinking every day. We're at more and more retirements. Labor force participation rates, if you want to use Bureau of Labor statistics, labor force participation rates that haven't been this low since the Nixon administration when the greatest generation started retiring. Um, there's a glut of people going to move into the next, into retirement, and the group behind them is woefully unprepared, especially in the insurance and financial markets. Again, to your point, 40s and 50s. And part of that was, part of that's industry, part of that's cultural, United States issues. Um, but to train an account manager takes 5 years on average. It's not something that you haven't, if you haven't been planning for it already, you're in trouble. And I'm not going to sugarcoat that for you. You're in big trouble. You don't have anybody that can do the job to maintain just treading water today. So that's where you need technology to come in to scale to keep that population not only able to tread water, but educated enough not to make a mistake. And that's where your technology comes in. It limits your exposure to big errors, big omissions. And that's where you need to, again, technology is there to help transfer risk. Everyone insurance knows insurance is the act of transfer of risk from one party to another. That's what we're doing here. We're insuring you by giving you the tools to maintain your workforce or maintain your output and throughput. And if you're in the position that you can grow, well, now we've given you the ability to scale and hyperscale.
Yeah.
And do so at an affordable. I'll take one more at we'll do so kind of at an affordable level or at least a predictable level. Um, Most brokerages, an account managers start around 60,000 to 80,000 dollars a year. In California, poverty line is $105,000 a year. That just came out from the state of California about 3, 4 months ago, and everyone kind of went, yeah, that's about right. So again, who's going to take a job at $80,000 a year when people aren't, I mean, not to dig these people, not to give a slight, but you're not going to get the best and brightest. You're going to get some people that need training and development. But when they stay trained and developed, they're going to be great. But again, it's a timing issue. You don't have the time. You don't have the time. Your super manager, your super farmers are supervising everybody else. So again, some of that relationship training to get an account manager to be competent, that 5 years is a lot of hand in glove training, a lot of one-on-one looking at somebody, helping them out. That's just not available to be done in this today's environment. People need to be able to be, I mean, you're seeing it even in technology today. You're seeing people become player coaches. They're managers, but they're individual contributors as much as they are managers. There's not going to be a whole lot of time to go nursemaid a rookie.
Right. So, so yeah, explain a little bit more about the technology and the AI side of that, especially as, there is kind of a technology gap out there in that, there's AI vendors left and right selling AI to these insurance brokerages. And, whether it's health or property and casualty, et cetera. But they're kind of, it's like putting the cart before the horse, right? So tell me a little bit about how insurance companies can reach that technology gap while at the same time, you know, then implementing that AI technology to create this continuous brokerage. This is a concept it's a term that you've coined, Alex.
Yeah. So data curations starts with data curation. Bring everything you have into the system, everything that you need to effectively do the job. The AI layer at that point can do the predictive modeling, the analytics with some coaching from the core group of a governance platform and a governing body. Um, and that's where it really starts as a brokerage. You need to have simple governance and simple structure to go, okay, who come in, let's lay this groundwork really quickly so that we can train, because basically you need to train an AI model to us at the initial standpoint. And then it can go forward and start doing that work. And we do a simple project management piece, kind of called the RACI form. So who's responsible? Who's been assigned to do the work? Who are we getting consent from? Who are we informing? And then we have the experts do that work. Um, and that's just done so everybody knows what the process is going to be going forward. We call it's transparency. And I like to call it radical transparency. You know exactly where you are in the model at any given moment. Uh, and then we go into our build, right? When we start grabbing all this information, really you decide what you do as a brokerage at that point is you decide what you want the AI to do the work of. Do you want handling the really tough esoteric issues because AI can be predictable enough to give you solid answers? Or do you want it doing the renewal work, which allows the humans to do the tough part? So it's really an 80-20 rule. Do you want the machine doing the 20% or the 80%? Because the hours will most likely buy you back similar. Um, we tend to suggest that, have the machine do the simple things because you trust machines are simple enough to take common answers, common orders. As you work through the problem you can eventually get to 100% automation, but you want those humans and those experts in the loop to do that work first. That way they know what to expect when they train the model. And when we do this work, we do it with, best in breed technology, current model technology. We don't try to, there's plenty of commercial off the shelf stuff today in the marketplace that will really handle a typical brokerage. And so again, it turns into a continuous touch, right? So now you can have an AI model constantly touching your clients. And one of the examples I gave earlier, the body shop in South San Francisco, that model can continuously look for new ratings and new coverage limits every day. And if it sees in the area coverage limits have gone up, it can now send an automated email to your body shop owner going, "Hi, Mr. So-and-so, I'm Alex from XYZ Brokerage. Um, you, you're doing fine right now. We've got your policy not renewing until January. However, we've just noticed policy limits have gone up in the area for your specific, profession and your specific industry. Would you like to, you want to come in and talk, about this now, or would you like to wait till your renewal time? Yes or no?" And depending on what that answer is, the model will either send me, the real broker, the real Alex, "Hey, Fernando at Fernando's body shop wants, we send him an email about his coverage limits. He wants to talk to you about that." Great. Now I have a warm lead. So my broker is happy because he's not trying to cold call to replace business. He's got a warm lead into the system. My account manager is happy because it's one less thing they have to do. And you as the owner have just gotten an upsell that you weren't expecting. And this can be done for every one of your clients. And it can look at every one of your clients and say, yeah, so and so is missing this policy. They have these policies, but they're missing one other. Um, this, great examples are cyber insurance. A lot of people do not have cyber coverage, even though they should. If you have a website, we used to tell people, you have a website page facing the public, you should be having cyber coverage.
Yeah, perfect. Perfect. Um, I wanted to open this up to questions. We have a few people here, Mike Morrison, Rodney Guffey, Jared Brogny. Thank you so much for joining. Does anybody have any questions about the whole concept of data and AI as a sort of a differentiator and as a way of managing, kind of like the demographic changes we're seeing, uh, or would it make sense for for you, Alex, to kind of go into that five-phase transformation?
Sure. Yeah, when we'll bring up the slides so we can talk through it and talk anybody through it if they have questions.
Mhm.
So again, step one, visibility. You gotta get into your system. You gotta know what's out there. You need to bring all your sources together. What do you want? What are you trying to achieve? What data would be used to achieve that information? Step two is connecting that all together. It's unification. So again, this is data warehouses, data lakes, or lake houses. There's tools already commercially available off the shelf where we can bring that information in, consolidate, and start getting it to give you unified answers. Fallback, fallback hierarchies, file feeds. Again, these are all just tricks of the trade to get your curation there. And again, getting out of your Savile Row tailors, getting it out of their heads, getting it onto paper, getting it processed, getting them to actually describe their process and putting that into the system to basically, again, for step three, giving them hours back. Um, we're trying again, we're having market consolidation, we're having labor force consolidation. You want to stop burnout, you want to stop your employees hating you, give them hours back of their day and stop having them do the mundane tasks and start having them do the really complex tasks, which you say, you trust them to do. It's like, listen, I'm empowering you to answer these more complex questions. I'm empowering you to get more leverage on newer relationships, newer opportunities for growth and for scalability. A big part of, a brokerage that I had to deal with was vendor reviews. Well, it's hard to do 30 vendor reviews in a year when you're handling 300 accounts.
Yeah.
Because this is a constant problem that you have in any brokerage. Brokers are looking for new tools to try and get more money in the door. Some of these tools are just outright garbage, but you have to listen and hear it anyway because you need to decide whether you're gonna let them buy it or you're gonna let them even into your system. And again, you want to be good. If you're an IT group, you're trying to be good to your clients, which in IT in a brokerage, your clients are your brokers or your account managers. Again, you're trying to find tools that help them do their jobs easier. Again, achieving phase three, giving them back operational time, giving them hours of their day back. And then finally, again, and once we start getting that intelligence layer in on top of the data layer, you're going to start seeing scalability. Um, you know, you turns your morning coffee. I used to call them morning coffee reports. They still are to some degree. The morning coffee reports were usually, done by your entry level AMs or your entry level clerks. Well, that group really doesn't exist anymore either. They cost too much. They're they're not predictable. So again, it turns into, well, I used to call it, mirror, mirror on the wall, who's the fairest one of them all. Um, their morning coffee reports, the natural Sturm and Drang that just gets covered by the order, and that intelligence layer just covers that. It will, now that you have curated data that doesn't have your AI model hallucinate or give you just garbage results, you now have a powerful intelligence tool at your disposal to look at any one of your clients and go, all right, here's your gaps in coverage, here's your policy limits, here's their upcoming renewals, and here's what you've been doing on the customer service for them. It's a very powerful, at that point, you can go into a player coach model very quickly, very fast, and then keeping again achieves operational scalability. You're maintaining your headcount or allowing your headcount to naturally shrink, and your productivity is either staying right where you want it to be or it's growing. And if you're in a firm position to do consolidation yourself, well, you can now bring on a new book and not have to worry about bringing headcount in with it.
Yeah. Yeah, perfect. So I want to open up the floor to questions. If you have any questions, this would be a perfect time. And then just to give you a little bit of information about who we are, Lakeside Consulting Group, www.lakesideconsultinggroup.llc.com. Uh, it's a systems integration company that works with data and AI to help insurance companies, basically modernize for the AI age, increase their coverage, become continuous brokerages, get their processes um, uh, really, really, really put in place processes so that they can decide as to whether they want to scale 10 to 15%, 20% a year, or whether they want to get into an M&A situation dealing with the talent cliff, and other type. Tell us a little bit more about what Lakeside Consulting Group does, Alex.
Yeah, I mean, we're a full service Amazon, Salesforce, and Google Cloud partner. So we can, any of those groups, and you have anything in your ecosphere, we can handle very straightforward and bring in the talent necessary to do any of the tasks with that environment. Again, with the AI layers, we're very much still an open group. Um, we can work with Grok, OpenAI, any of the other platforms as well. I mean, and bring that layer into your ecosphere to where it's secure and giving you predictable analytics on a regular scale. Uh, and then again, if we also do some level of data services, we do some level of IT services as well. So we can provide tier two support for your vendors or for your people. So if they've got questions that need a little bit more technical capability before you go back to the vendor, we usually are there to answer those.
All right, perfect. And I'm just going to put this up here just to share this, Lakeside Consulting Group LLC.com. Alex, I just wanted to say thank you so much for your time and for sharing this new concept, which is not really a new concept, but it is a concept that you're essentially identifying which is the kind of like the path forward for insurance brokers. Um, Mike, Rodney, any questions from you all about this whole process? Okay. Any closing words, Alex?
Uh,
Anything
I,
you feel like the people need to know?
every day you look at your, I would say I'll leave this with words of wisdom and warning. Um, each time you guys pass through this opportunity to grow or scale, you limit yourself to future growth and opportunities. Failure to, sometimes the best decision is taking a risk, not taking a risk. Knowing that it might not get there to where you wanted to be on day one, but it will get you there on the day 30 that you need it to be. AI is new. It's scary to some people, but at the same time, it still requires people at the end of the day to give it input and questions to be answered. Um, it's not it's not the Skynet that's going to bring us all down that everybody likes to doom and gloom in the news and the media and social media. It's a tool. It's a necessary tool now these days for you to grow and to actually do to perform your job to what is expected now in the 21st century.
Perfect. Thank you so much for that. And then just wanted to let you know that on the 28th of May, we're going to have Mike Morrison, who is here with us today, be a guest speaker. Mike, would you like to tell us a little bit about what you are going to talk about, the topics you're going to cover?
Sure. Yeah. Thank you guys. And thanks for the presentation and all the information today, Alex. I'm not in the insurance industry specifically. I'm a cybersecurity consultant, and so I look at things from a little bit of a different angle, and so a little out of my league with Alex and your knowledge. But so apologies that I don't have any questions today. But I understand your concepts. I can see how they apply to, di many different business models. But what I do is I assist companies either in a VC role or just in an advisory role in general. And of course, these days, one of the biggest challenges for organizations is AI implementation, governance, access to data, making sure the right roles in the companies have appropriate AI tools that they're using, and that those tools are not reaching out of their bounds, to data within the company they shouldn't have access to. So it's a real challenge. The tools are still being developed that are helping us kind of rein that much power in. These are very, powerful, useful tools. But we're seeing every day in the media ways that tools are being used either unintentionally or maliciously in a way that can harm the company. So I'm really all about risk reduction in the cybersecurity world, and helping clients realize what solutions are out there, and assisting them with implementing those to kind of reduce the risk that comes with the use of AI. So.
Perfect. Perfect. So again, it's going to be next, it's not 2 Thursdays from today, May the 28th at the exact same time, 12 p.m. Central Time, 3 p.m. Eastern Time. It's going to be Alex Paris as the co-host and Mike Harris Morrison as the presenter. So I wanted to say thank you very much for those who attended, and we'll see you next time.
All right, thank you, everybody.